Hello, Warriors. Alexander, Brock, Hugo, Jays, how are you? So we're all sitting here with bated breath, waiting for words in 2 hours. How silly. Just coattail Blake. Who cares what Paul says? Just go into the room. Anyway. So who wants to get in front of those words? Dollar's still looking heavy. How are you, Amira? Shabbat Shalom. I'll resume the share. Thank you, Marco. You're like my manager. Paul, thank you. Do you think I have old timers by Friday? Huh? You know, sometimes a lot of big things happen on Friday. And you ever notice that, by Friday, you've a whole week of trading, maybe you're not in the mood and you let your guard down and things happen without you. So let's see what happens today. Actually, I would, let's just say Paul is, hello, Paul. Don't call yourself a newbie. It kind of has, give yourself more credit. How about calling yourself a maverick? Learning to trade. What do you think, Blake? Do you like that word newbie?
Hey, if the shoe fits.
Doobie doobie doo, a newbie. Anyway, what do you do for 2 hours now, Blake?
Well, I'm sitting here. Well, the thing is, I look at these charts and I'm looking at the market just in general, and I'm like, wow, there's been like no movement. There was a little bit of movement in Asia, and it actually provided me some opportunities to take some profits and different things. And
nice.
I was kind of worried at the moment. It looked like we're going to run, and I'm like, dang, did I just really wuss out? And then, when I got up today, I was like, oh, okay, that was actually a smart decision. Because it just allowed me to shore up some trades, to pull down some position size. Yeah. So, when you have an event like this where, well, there's a few, like,
you've talked about it in your videos.
Issues,
so what did you tell people about these events in your video?
Well, I mean, that don't get yourself into trouble ahead of these types of events too, and try to put yourself in a profitable position ahead of them, not like just before them. So I'll give you guys an
peso
example.
Looks like it's trying to come out of here, Blake.
Yeah, you know what? It's funny. I was just actually looking at that chart. So let me just show you.
Maybe it's a sign that we're going to get a sell-off.
Well, let me pull up the dollar mex and go.
By the way, no guest speaker today.
Oh, okay. Thank you very much. So this is the dollar mex, really, like, I mean, I'm scrolling out. This is a daily chart going back to 2012 or whatever. It's interesting. I've seen a lot of people try to fade the dollar Mexican peso, and in like
Blake,
longer
it's
term,
it's going to take out the 2020 high. You know why I think so, right?
Why is that?
Okay, go to 2017, that high. That's one. Go to the high we had in 2020. That's two. And look at that RSI reading at 2.
A lot of people feel that that the dollar Mexican peso is the next one of the next South American currencies to really fall.
Yeah, like the EMs and stuff.
Yeah,
out in Argentina.
the Argentinian.
But that RSI
peso.
reading in 2020, bro, that was powerful. And markets rarely peak long term with like I don't know, it looked like it was about an 85 reading on that chart that you had at the highs.
Yeah,
Almost like, yeah, what's that reading?
that was like 97.
Okay. Yeah, that's rare.
Yeah. Oh God. Yeah. It's extremely rare. No, I'm not in the camp of like, even though I'm long dollar max right now. And
Yeah.
I happen to be long the trade. We have a pattern in play too. That's
I know Greg is kind of
showcasing.
negative on it, isn't he?
Yeah, and I understand why. I understand why people like want to play it on the short side. Because as equities move higher, you want to be long emerging market currencies. But let's just really talk about the
because it
base
hasn't
that
made a new low in such a long time, and the March risk on's been exploding. Why aren't we already at new lows?
Yeah, this is let's go into, well, you know what? I'll just do it like this. Let's take this chart that you see right here, and we're just going to overlay it with the S&P. And
see, we don't need those other guys, Blake.
Huh?
We don't need those other guys for face.
but look, I mean, how many people this year, and I'm just going to put this year alone, how many people this year have just been, I mean, that's a good, you park your your money in pesos, and you're riding a nice, a nice interest rate, and the carry that you get on buying pesos and parking money in the peso, it still pays. It does. I mean, the rolls that you get, it pays.
Yeah,
but you're not getting the bang for the buck that you used to get when you buy Mexican pesos. You sell dollars, buy Mexican pesos, and sit on them, because you would naturally, as stocks continue to go higher, you would get the appreciation of the peso as well. So why is that? And I think I could tell you probably one of the reasons why that's going to happen, or why that's happening, is because people know that the Federal Reserve cannot maintain these low rates forever, and they're going to have to play catch up soon. And it's probably been that you can see the hesitation all year long, that we've done that. And yeah, we got to spike up above the 21 level, and that's when everybody thought equities had peaked over here.
Yeah,
but with equities continuing to grind higher, there's been no reason to exit your pesos. But I'll tell you what, if we get a 5-10%, 15, heaven forbid we get a 20% correction, the dollar Mexican peso will be trading up at 22, 23, from current prices around 2040, in my opinion. And you want to, this is such a fast moving currency. When it starts moving higher, that you have to be participating early, if you want a good seat at the table, if you will. And when it actually breaks out, you got to be watching it watching it very carefully as it breaks highs. And that's why I'm looking at what the way we've been playing it recently is, I bought it was it 2 weeks ago when it was down here at 1980, and I sold it when it got above the 200-day moving average. And now I'm trying to buying again this week on dips. And as a retail trader, you really get hammered on the overnight interest on Wednesdays. So just try to avoid it on Wednesday night.
Good tip.
Yeah, those carry costs are they run pretty they run pretty high, excuse me. So anyway, that's one of the things that I was actually just looking at this morning. Interesting enough, Dale, that you brought that to our attention. But let's talk. Whoops, they want to do that. Let's talk a little bit about what to expect with Powell today. So well, actually, you know what, Dale.
But
Can you talk for just 1 minute,
yeah,
please? Okay.
sure.
Yeah,
All
just
right.
give me. I'm going to type out one thing. I want to try to. I forgot to send my uh,
Yeah,
tweet. I
no,
was going to tweet
go ahead.
something this morning. So just give me 1 minute.
Yeah, go ahead. So, what are your guesses, everyone out there? Dove says nothing. Positive or negative market reaction to Powell? What are your guesses while Blake's getting ready? And what positions are you holding into it? Tiny Hawk? Okay. Because I mean, he says nothing because there are an awful lot of Fed governors with no voting rights saying let's do it. Probably bearish. Okay. Yeah. So Dovey then, right, Anthony? And he's got the excuse of Delta now. And how about, Afghanistan? Probably doesn't play into it, but yeah, I think they're wrong. I'd sell strength in the dollar if that happens, Charles. Dixie 93.20 to 40 stops over last week's highs. Something I'm thinking about. I think people are a little too short euro here. I think euro could trade 119, 120.
Okay. Sorry
All
about
right,
that.
that's
You
okay.
think you're going to trade 119, 120?
Yeah,
Wow. All right. Well, you know what?
and then 113.
I wouldn't. That wouldn't really surprise me. I think a lot of it has to do with the next
Well,
couple of
that
days.
would mean I'm right. That would surprise you.
No, that's not true. That's not true. But you know what? This is something that I did talk about. Regarding the euro, I wanted to show you guys something that I find. I don't know if we talked about this yesterday. I think we did. I was really tired yesterday, by the way. I had a huge debacle with my son's game and then food afterwards, and it went really late. I ended up sleeping like 4 hours, not last night, the night before last. So yesterday I was a little tired, and I couldn't remember if I talked and discussed the euro yen, but the euro yen.
Yeah, you were.
I did. I think I discussed this. This is
did.
why I'm having a really difficult time being bearish euros right now. If you look at this euro yen, and this is a 13-year trend line, right?
Yeah.
That green line that you see there, and I'm on a weekly chart, so you can see this huge bounce. By the way, this is what they call a piercing line formation, very bullish chart formation. When you have these bearish candles, then you have a white candle, big huge white candle, almost basically engulfing but higher than last week. That is a very, very bullish development. So it depends where we close the week. Obviously, we have, not only do we have the Fed chairman today, we have the PCE just in a few moments. We also have, the end of month flows that are coming through the market today too. So there's a lot of, and I think there's some options expiring today. Like anyway, there's a lot going on this morning, so you have to be a little careful. But I look at this development here and this big huge bounce off the euro yen support. This is one of the things that are really worrying me about being too bullish the dollar. But let's talk a little bit about the dollar index really quick, and then we can go and reference the euro. This is the dollar, and remember we had a breakout last week of to two new 2021 highs, and we closed the week actually with that that reversal candle you can see in the
Yeah.
dollar index. That's a
Right.
shooting star. We actually closed on the breakout point, and then this week we've obviously pulled back. Everybody's kind of moderating, just regaining its composure ahead of today's speech. Look, if the Fed chairman comes out and is when has he disappointed the doves? I mean,
Yeah.
you think about like
Not
all of
since he's saying kumbaya with Bernanke and Yellen. Remember, the three of them got together after his last hike. It showed them talking, or they were in a meeting, all three of them, and then he reversed and he converted. But remember, he did tighten, and Kramer did another rant, and he turned.
I think the fact of the matter is that what does he have? He's going to I think he's going to keep the idea, and the market is going to continue to believe that he's going to taper. But what I mean, how would it hurt the market if and he knows it would hurt the market if he was too hawkish. So what benefit does he have to be hawkish today, right? But I still think he's going to really lead.
Well, he's got a pretty good cushion underneath him with the markets being where they are.
He does, but what's the risk of what's the risk of him highlighting the risks of the market of COVID?
Yeah, there's
so
that he will.
Yeah, so there's more risk for him to be hawkish at this moment. Look, we all know that tapering is coming this year, and really the pace or the amount of taper that we're going to see at the end of the year, or what people will start looking at is really the jobs data next week. If our jobs reports are strong next week, then people are going to go, well, the pace is going to be higher and it's going to be quicker.
Yeah.
If the jobs report is a little soft, people are going to go, whoa, that's the determining factor. It's not.
Yeah, so he doesn't have to say anything, and he gets to see that, and then they have a meeting coming up.
Yeah, like why does he have to put his neck out and say, I'm like, hey, I'm super hawkish? I mean, all he's going to do is disrupt the market. So, but the one thing that I think a lot of people overshot this week is they assumed he's just going to be super dovish. So if he's just, and that's where the grayness comes in the market, was he dovish enough today? Was he dovish enough to satisfy, let's just say, the dollar bears? And, I have to point out technically, let's just look at the dollar index, right? And this is one thing I wanted to bring up. Look at the, this is what we call a golden cross. Death cross is when the 50-day moving average, cuts through the 200-day moving average, which you got right here, right? So this is where the there's your death cross. There is your golden cross, right? So we have like this bullish momentum behind the dollar as it is right now. And the dollar, don't forget, we just hit new 2021 highs last week. And I think while the dollar index continues to make higher highs, okay, let's point that out, higher highs and higher lows, right? Even if we made a new low right here, as long as we can hold, somewhere over here, as long as we continue to make higher highs and higher lows, I have a really difficult time being bearish the dollar. Now, for the dollar today, and then we want to talk about today specifically, these are your breakout points. It's pretty simple. It's a narrow range, and the good news is, let's talk about the good news today in currencies. And I'm just referencing the dollar. I haven't even looked at, the euro or anything else. The good news is, especially with the dollar or with currencies, is it's Friday, half half of the market right now is on holiday, especially all the Europeans. Hell, we got two. We have Ryan, who's out in the woods, is somewhere in the UK. Steve and Stelios, who are on some beach somewhere in Greece. So I mean, you can just see, there's not a lot of participants, just even with our group. There's not a lot of participants, globally. So if a move starts today, there's going to be very little resistance to stand in front of it. So if the dollar starts breaking higher or lower today, I don't know if you really want to get in the way. So the reason why I point that out is because if we do get a dollar move, and we get a breakout, because he was way too hawkish or way too dovish, we should get some extension of that move today. So just think about that for those of you that are day traders. What do day traders love to do, Dale?
Make money every day.
They want to fade strength, right? That's like
yeah.
I mean, what? I mean, you see a strong move and you're like, oh, it's overbought, so I'm going to sell it.
Yeah.
Oh, it's oversold, I'm going to buy it, right? It's like a natural day trader. Like there's always a reversion to the mean intraday. Yeah, days like today, you got to be really careful doing that because, like I said, it's a summer. It's the end of summer. Not a lot of people here. Lack of liquidity. End of month. Be careful. You know what I mean? Alino asked when is Powell's speech? Powell's speech is in actually an hour and a half, an hour and 39 minutes. Speaking of which, in just a few minutes, we have some of the Fed's favorite inflation data. We have the PCE numbers coming out, so we got to pay attention to that because that's what we're going to get first. And I'm sure Powell's got that data, and that's the other thing that Powell's got to think about too is, inflationary pressures are they're not moderate. They are persistent and strong. And you've heard, I forget who we heard yesterday. I have to go back and look. Was it Clarita yesterday that referenced, some sticky inflationary pressures? I mean, most Fed governors feel the same way, right? Let me circle back. I want to talk a little bit about currencies. Go back to currencies really quick. The sterling. This is. Did you? Oh, Dale, did you listen to Macrobeat yesterday? Beat my interview that I did with is actually, his name is Biat, but it's spelled beat.
No, I haven't.
It's great. He was referencing some of the problems that the UK has been having with drivers, supply issues, dairy. They're like
shortages developing and everything, huh?
Yeah, but he believes it's more Brexit related. And then on top of that, you got the global, you got
supply chain issues everywhere.
You have your normal supply chain issues that we're seeing because of China and other
the cost of
global
freight
factors. Yes. And then
shipping,
on top of that, you got the UK issues because of Brexit and, getting from, European countries to the UK and whatnot. So,
okay.
Anyway, he was referencing that, which I was already looking at the euro sterling as being, a long, bull flag pattern, very shallow pullbacks. Is my chart of the day the other day. And I like this on the long side, actually. And I still actually like it on the long side. I want to be long the euro sterling, as long as we're above this 85 pence level. That false breakdown right there is very bullish to me. Like, and it's not like I'm looking at this going, oh, we're going to go to parity. I just think, we've got some upside, work to do here. Anyway, the reason why I wanted to bring that up is because, I think the sterling's been underperforming here. And, you got to notice that we had this really big drop. We're holding like basically a 38% retracement. So very shallow. So I think that this, especially if we see some dollar strength today, I would be looking at playing the cable on the short side. This is one of the weaker sisters, if you will. The Aussie still below 73 cents. And I have the same attitude as I did when it was below 74 cents up here a couple of weeks ago. I think this was 3 weeks ago. I was shorting the Aussie at 73.80 or whatever it was.
Yeah.
I feel the same way about it now. I just the problem is obviously what's happening at this moment. It's not the I don't want to necessarily just start shorting the Aussie ahead of Powell's speech, but what I will say is as long as we stay below 73 cents, I don't want to be bullish. So I'm looking at the Aussie is still hopefully making its way down towards 70 cents where I'm a buyer. I'm an aggressive buyer down here. But like one of the guys in our chat room, Benedict, he pointed out a harmonic pattern. It was I'm trying to think exactly what it was. I think it's not that. It was there was a completion of something like this. I'd have to go back and take a look at it at the charts. He referenced them a few days ago. So I'd go to file lists. This is our chat room, by the way, guys.
This is what I mean, guys. See, so Blake has his own ideas and trades, right? But you see something like this is something that Blake could use with his narrative. So anyway.
Oh, I get a lot of ideas from
a lot of people don't
chat room.
understand
Yeah.
that.
No, our chat room's a community, and that's why I bring. Whoops, this is the Swissy. It says it right there. Anyway, you can sift through these. These are our chat rooms, guys, where we have our trades room and news and research and Forex flow. And anyway, that's the Forex Live community, or Forex Live. That's the Forex Analytics community. Sorry. Anyway, he was thinking that it completed this week, and I still think we're moving lower in the Aussie, but he may be right. He may be right. I may be wrong. So, but that's what I'm still looking at with the Aussie. I did think it was pretty oversold too. The loonie, the dollar Canadian's holding up really well. And I know we really stretched higher this last week, and we really had a big rejection. And if you guys were with us last week, we talked about, yes, we were hitting 2019 lows that capped us, right? We had a pretty aggressive sell-off, a little bit more aggressive than I thought it was going to be this week. But I also bought the dollar Canadian down here at the 125.88 level. I sold some of it on the way up, and last night above 127, I took some off as well. So I still have some exposure here. But the whole plan this week with the dollar Canadian, and if you were listening to our morning edge webinar, was to get long down here, hope that we'd be up where we're at right now, and you can move stops to break even. So my stops are all break even with the dollar Canadian, and I'm looking to add on a hawkish PAL. But the reason why I'm pointing all this out is because if you look at the dollar Canadian in this move that we've seen here, just the last couple of days, that's a pretty bullish move. So if we do have a more hawkish PAL, then we might get a breakout. So anyway, let's note that we got the PCE data coming out here momentarily. So I'm going to go to Forex Analytics, go over here to where you have your calendar, and I'm going to open Data Flash. This will give you the data as it comes out. This is included with your Forex Analytics subscription. Okay, let me move this over really fast so I can go back to the charts. So we're gonna pull this over when the data is coming out here in just a little less than 2 minutes. This is almost as quick as Bloomberg, and it's actually been faster than Bloomberg on some occasions because I'd run it right next to a Bloomberg system.
Well, Bloomberg's getting kind of old. Should be faster, right?
Yeah, no, but the interesting thing is that was probably spending $2,800 a month. That was the feature that I tend to use the most, which you could get for free over here or included with Forex Analytics for much less price. So let's take it over to the dollar index. I doubt we're going to see much of a response for the PCE, but you don't know that. I mean, I always say that with a caveat with economic data. Well, everybody's looking at the inflation data, but if it comes in way above or way below expectations, it will jolt the market, even on a day like today when you have Powell speaking in an hour and a half. So that's okay. Surprise. Oh, personal income's stronger. PCE came in line, but look at the revisions too. So incomes are rising. Inflation's going to be persistent.
Yeah.
That means people that are, they're getting paid more. That means they're going to cough it up for whatever they need. So you're going to see that inflation be a little bit more sticky when you have incomes rising like that. So anyway,
the dollar's selling off on that little.
It's coming off a little bit. Yeah, a little bit. I think you probably got some people are like, oh, I think that the PCE is going to be strong. So on some stronger data or inline data, I'm going to try to just, exit some positions going into Powell's speech. So I wouldn't expect much of a move here. Even if the euro pushes up to 117 and change, I would expect it to be, capped ahead of Powell. I wouldn't be getting too excited here. But again, I'm going to say that today you have to be really, really careful fading moves. Like a lot of times you can have, you can see, especially like on, jobs reports, interest rate decisions, you'll see a strong move and then, then they'll reverse. You'll see, trends revert back to the mean. Well, Today you have to be really, really careful. A lot of people are sticking around for Powell's speech, and after that, they're gone. So there's going to be less participants already because they're on holiday. There's going to be less participants around to try to fade a move. And there's going to be less desire to do that because people are going to be like, oh, well, I got the result I wanted, or I got stopped out. You know what? I'm going to go enjoy I'm going to go enjoy my last weekend of summer, or, their last bit of their holiday. So just keep that in mind. So Dale, what else? I guess what we should do is we should look at the S&Ps and we should look at stocks really quick. DJ said hedging for a potential everything blow off top rally. Yeah. I mean, look, there's no reason to be bearish. No reason to be bearish. I don't know if obviously the risks outweigh the rewards, just to go out and start buying the S&P here. But you also have to realize that we're in a market that's grinding higher. And whenever you're in a market that grinds higher, there always is a risk that you get what DJ said is you get a blow off top type of move. You get a move that just keeps grinding higher, and then all of a sudden it just starts accelerating higher. When you have when I look at this technically, and I always try to tell people I'm not a statistician. Okay, I won't sit here and look at every chart pattern and go, well, based on the last 25 years worth of me looking at ascending wedges, let me grab my my calculator and my notebook on how many times this has worked out in one direction or the other. But based on my experience, when you have an ascending wedge like this, there's probably about a 25 to 35% chance we move higher, and a 65 to 75% chance we break lower out of this wedge. So there's a higher probability that we break lower out of an ascending wedge, but that doesn't mean that you can't break higher. That's why these
we've shown throwovers many times where it'll just accelerate through the upper wedge line. Yeah,
exactly.
Then back inside the wedge line is a trade. And you've been waiting. You always felt the finale would be a melt up.
I have, and that's what's really prevented me from being short equities. Like, I was actually just telling people in the chat room today, yesterday or the day before yesterday, I'm like, I'm really proud of myself for not, being short at all the S&P in 2021. Just
Look at VIX, Blake. Just take a look at that chart. I want to ask you a question.
Yeah.
Okay. All right. So what's the time frame you're on?
Daily.
Okay. Now, and I see that red line you have. You see how we're having all these false breakouts, and it's almost like for a long time it had no heartbeat, and now it's almost like it's a pretty big move to go from 15 to 25 in a day and a half, and it's done it a few times and then given
Yeah.
it back. It just it seems to me like there's something wrong with the structure, the way it's trading. To me, it's subtle, but it looks unstable.
Yeah. I think
I mean?
I think this is one of those situations where, you get maybe a false break over here, but you get
I mean,
a
you keep
move
getting spikes.
you get a spike above, like, for example, I think if we get a spike above these highs, so let's just call it 25, you get a spike above 25, and we hold it, that's your cue that you need to be short for a couple of days. That would be my guess. Like,
basically, it has a pulse, or we wouldn't be getting these spikes.
Yeah.
That's what I'm saying.
And I'm not one just to just buy volatility, and like, I have a buddy that bought volatility 2 weeks ago. He bought volatility. Well, no, I'm sorry. Last week he bought volatility. That he's getting. I mean, he is getting crushed right now. The decay is just eating him alive.
Oh yeah.
So it's like,
you
you have to be really, really
perfect
with your timing, when you're playing volatility. And the better way to do it is just assume volatility is always going to be low. So just so anyway, but I don't trade the VIX, but it is something that I do watch. And if we do hold, like I said, we hold above 25 for a day, I know that I need to be short risk for a few days. So it's going to be another one of these. Could be even more than that, but I think you're right, Dale. It's got a little bit of a pulse now.
Within a small range, it's pretty volatile, is what I'm saying.
And it sure can be. Yeah. When volatility spikes up intraday, and if you can catch it right, you can actually make pretty good money buying volatility. I haven't played VIX in a while, but anyway, let's see. Anything else I wanted to cover just before? Oh, this was my chart of the day yesterday. This is the NASDAQ, and I'm going to point this out, and it may not be today that we get a move that we start rolling over, but you notice I have an alarm set here. We start getting below this 15,000 100 level in the NASDAQ 100. You have to assume that we're going to see some sort of revert back to the mean, if you will, in a very strong uptrend. And it could take us down to, like, let's say, for example, it could take us down to 14,800, a break below that. We're probably going to go see the breakout point again, but we're going to still be in a very bullish trend. There's no reason to be bearish, but I think if you are long, then you have to be careful. You have to be very aware, especially if you're poorly positioned. Like for me, I'm looking for opportunities to be on the long side, closer to the 200-day moving average, in the
Where's
NASDAQ
that coming
100.
in?
That comes in right now at 13,700. So, I mean, by the time, let's just say theoretically,
that's your 10% correction.
Yeah. I mean, we see from here,
garden variety,
8% correction. We hit the 200-day moving average. Boom, get long.
Yeah.
And there's is there a risk right now of a 8% correction? Sure. And I think you have to be aware of that. And I think if you're long, especially if you, like I said, if you're poorly positioned, if you're long from like the last 2 weeks, that would be poorly positioned. You may be profitable, but those profits could be zapped within moments. So you have to be a little careful. And I'm just looking for places to get long risk, which would be down here. And so let me just piece this together for you guys, and then I'm going to let you go because I want to get ready for the Morning Edge webinar with all of our traders, all the Forex analytics traders. But let me just piece this together for you with the NASDAQ. And this is why it's in my head. And this is what I'm thinking about. And I'm going to try to give you some sort of actionable idea right now. Actionable as of let's just talk a few weeks from now. So let's say the NASDAQ 100 corrects, and Dale's right. The garden, I love Dale's got, his sayings.
I
garden variety, right? The garden
I
variety.
bought a book, Market Semantics, Analogies and Metaphors.
Oh, I love it, Dale. So we get the garden variety 8 to 10% correction in the NASDAQ. So, and then, obviously, buyers are going to try to step in somewhere around there, myself included. So what happens in currencies? So in the Aussie dollar, we see a correction from 73 cents to 70 cents, and we hit this major support. I've said this many times, and I'll say it again so you guys can hear it. That is a generational low, in my opinion. Yeah. I look at that and I'm like, I don't know if I'll be around long enough to see us down there again, ever, like in my tenure in the markets. That is one of those prices that I don't know if we'll ever see. So therefore I look for levels to actually get long the Aussie longer term. And one of those would be at 70 cents. So I think that a correction of the NASDAQ would actually lead the Aussie down to 70 cents.
And I'm not an Elliotician, Blake, but that rally from 55, 25 cent, 2,500 pip move, if that was the completion of just the first wave up, and then you get long at a nice corrective level, we should have at least equality of that wave of 25 cents and more potentially a fib extension for C or 3, because we're either, in 2 or B, and normally your wave 3 is the money wave.
Yeah, I mean that you're talking a move that could take us up like that, and you look at, and I'm sorry, I'm probably going to go off on a tangent here with you, Dale, but you look at like the U.S. dollar, Norwegian krona, which by the way I happen to be long right now. I've been playing it on the long side. You guys know I've been playing cup and handle, big breakout, but I'm not looking at the U.S. dollar, Norwegian krona thinking we're ever going to see these levels again. That was one of those generational highs.
That was negative crude day.
That was
okay.
No, I'm sorry, it was not. That was COVID spike lockdown. That was actually COVID lockdown.
Okay.
I don't think we're ever going to see those pricing. At least I don't believe we will. So in the US dollar, Norwegian krona, if we get somewhere up here like the 950, 960, 10 range again, God, I can't wait to be on the short side of that. And that would be the equivalent of being on the long side of the Aussie, down at 70 cents, 69 cents, something like that. So anyway, those are just like a little bit longer term views that could come into play if the NASDAQ does trade down 10%. If the S&P does, correct from current levels, we correct, let's just call it 7 or 8%. Which I think is very doable, and it's actually quite healthy for the markets to do so. But we'll find out. And if today's the beginning of that, I think we're going to really see the beginnings of it. Actually, it might even be as early as today. Remember, I think that Friday's data next week, the jobs report is going to be more important. People are going to be more concerned if we're creating jobs. More jobs than or, if the jobs numbers are better or weaker, that's going to influence how economists and analysts are looking at tapering moving forward and into the end of this year. Powell should not rock the boat too much today, but it might be enough to where people hoped he would be more dovish, and maybe he's just not quite. He's dovish, but not quite as dovish. But anyway, look for the dollar. Breakout points are 93.15 or 92.80, and get ready for Powell, guys. I hope you all. Hey, I have to mention, if you love these webinars, these free webinars, please do us a favor. Visit our webinar sponsor. That's Forest Park FX. We've been working with them for 5 years now. Open your accounts through here. You have a lot of different brokers you can choose from. So many different brokers, and then you can get like cashback rebates. I'm getting cashback rebates now. It's the first time in 5.5 years I've never got cashback rebates, but this first time in 5.5 years I've had the ability to actually do it. Not trading institutionally, trading privately, and now I get cashback rebates, which is kind of cool. You can email them right here or chat through them on Skype right through here. They address those two communication channels. So make sure you visit our webinar sponsors, or you can visit Pepperstone Securities as well. Guys, I want to thank you all for joining us today, and good luck today with Powell. And Dale, thanks for always being the host, the best
Hey,
host
Blake,
out
what
there.
what a great session today. I think that people should save this video of this face episode, because there were so many nuggets and narratives that Blake laid out for you guys that are actionable ideas that very generous of him doing that. Normally, subscribers get it. So I really think that you need to save today's video and take advantage of what he said. And Blake, I enjoyed it being just you and I this week. I had a good time working with you.
Same
And
here.
yeah, so
It's pleasant.
without, because then I'm the only one interrupting.
Yeah, I don't have
Okay.
Steve stepping on me all day.
All right,
Dale,
buddy.
You've been great, and I always love having you here, and I always love interacting with you. So it's been a really great week, and thank you so much.
All right, and this is a great day to subscribe. You have the whole weekend. The Hedgies are coming back from the Hamptons in a little over a week. Get ready and prepped for September, and get into this chat room with these people, especially if you're new. And I'm not going to say that word. You're learning how to trade. You will learn how to trade by surrounding yourself with people that are better than you. You'll rise to their level. It's like osmosis over time. And that's it. So don't just count your pips, count your blessings. And everyone have a great weekend. Blake, have a great weekend, and we'll see you all Monday. And I hope that we added value to what you're trying to accomplish as a trader. I know it's not an easy endeavor, but we lay it all on the court for you, and we root for you. So
Thanks,
adios,
Dale.
everyone. Take it easy, Blake.
Bye-bye.
Bye.